Thanks again, amazing traders. I apologize that this video has to come late, but just bear with me, please. We are going to look at the market review for the entire last week for pound dollar and euro dollar using the Asian range. Okay, so on Monday or last week when the market opened, I just had to quickly do everything so that we don't get to waste so much time. We saw the market trade above the midnight opening price, which is actually the intra-day open. In case this is your first time watching this video, I have a detailed video on this. I'm going to put it in the description so that you may as well go to check it out to be able to catch up with everything that I'm going to do here. So we saw the market trade below the Asian range, which is actually called the Judas swing. This move right here from the midnight open right down to this low is what we call the ICT Judas swing. Okay, a Judas swing is simply a move that is against the desired move of the market. Like if they are going to take the market higher, first of all they will take the market lower to lure traders into believing that the market is going to go lower, and then eventually they will take the market to the opposite direction. So that move from the midnight opening price against the intended direction of the market is actually what we call the ICT Judas swing. So we saw the market move below the Asian range, and how far did it go? We are going to do measurement to see how far the market went. So if you can look right here, you are going to agree with me that the market actually went one standard deviation below the Asian range. Okay, one standard deviation, which is actually very accurate. You see 1.28745, and then if you actually put your chart on the 1 hour time frame, there's a bullish order block to the left. Okay, I'm going to leave that for your assignment. So if you were about to trade, this will have been a very good opportunity for you to take a buy. And remember, we have been saying that we are only going to look for buy opportunities below the Asian range and then sell opportunities above the Asian range. So if you also look here, you are going to realize that this candle right here, okay, this candle here is an ICT breaker block, okay, because we have liquidity that has been taken below this low here. So when the market returns above this candle, it's going to use it as what, as a breaker block. This candle right here, 5 minutes bullish breaker block. Okay, so you could actually be taking a buy setup from here, and you will target any desired pips of your choice. Okay, you could still target this Asian highs here, okay, as your draw on liquidity. And if you look at it very well, you will realize that the market actually traded above here with just this week's here. So the Asian high buy side liquidity was actually rated with this small move here. In smart money concept, those moves are not small. Okay, they are very, very significant. And like I have been saying again, you can still buy at the midnight opening price, which means you could still buy here. Okay, you could still buy here when price returns above the midnight opening price, or you could still sell also when price came below the midnight opening price. Okay, so you could still take a sell here, and you are going to be absolutely correct. And where did the market go to? The market actually traded back into what, a 1 hour bullish order block, which is what I have marked right here. Okay, this 1 hour bullish order block. So I'm going to leave it for you to go check it out. Put your chart on a 1 hour time frame, you are going to see this move here. So we pay attention to the midnight opening price always, like I preach. You are going to see how price is going to trade that. Okay, all right, let's go to Tuesday for the sake of time, so that we see what happened on Tuesday. So on Tuesday for last week, I think we did a market review on this already. We saw the market equally open, accumulation, and then you could still take a sell entry the moment price took out this Asian high buy side liquidity. You could take a short sell here and target the lows. Okay, but since market structure was bullish, I actually participated in this sell. Okay, I mentioned that in the old video, so I will not go over it again. So If you didn't take that, you will have waited for this small manipulation here when the market traded below the Asian session, taking all the Asian lows buy side liquidity. So if you were smart, you could still take a trade right down here, or you will have waited for price to return at the midnight opening price, okay, which is what you have been preaching. So you could still be buying right here, okay, and you absolutely be correct. Now we are going to see how far the market went. Remember, we have been targeting just one standard deviation if you are buying above the Asian range, or one standard deviation below the Asian range if we are selling. Now let's see how far the market went if we took a trade there on Tuesday. So the market actually did let's see 3.5, right? This is 3.5 standard deviation on Tuesday right here. You see that 3.5 standard deviation above the Asian range. That was a massive move on Tuesday, okay, which was at 1.29620. But remember, our target has only been what, one standard deviation. So if you did here, you will still be very okay. You will have taken your profit here, and then you will have left the market, and that would have still been a very good win for Tuesday. Let's see how many pips that would have been if you took that buy here. That would have been a whooping 39 pips on Tuesday, which is not very bad, right? It's not very bad. So let's look at exactly what happened again on the Wednesday using the same strategy. So on Wednesday, the market actually opened midnight opening price like we have here, and then we traded lower. Okay, we traded lower, and this we have here a 1 hour fair value gap which I have extended across. You can see how the market traded here into that 1 hour fair value gap right here, and then on Wednesday the market returned into that 1 hour fair value gap. Okay, and if you notice also, this is the accumulation. The manipulation occurred when the market traded below this Asian range, okay, this Asian range, sweeping all of this liquidity below the Asian range, which I did mark here in red. This was the Judas swing actually, okay, when we swept all of this liquidity below this Asian range with this move right here. Okay, I actually took a buy entry here, but the market traded lower and stopped me out here. I wanted to see price, my target was just this high, okay, the most recent high that was formed. I just wanted to take my profit here and leave the market, but I knew price was going to trade above these highs because that's where the majority of the liquidity is resting. Okay, then if you agree with me again, you saw the market traded lower, okay, took all the Asian low sell side liquidity, and then went back above the midnight opening price. So you could be a buyer here, you could still be a buyer into this 1 hour fair value gap, and then you could still be a buyer into this 1 hour bullish order block, this thing that I've marked right here. And you see how price stayed above this midnight opening price and this mean threshold of this 1 hour bullish order block right here, and then moved aggressively higher. Okay, moved aggressively higher. So how far did the market go? Again, we are going to take the Asian range and extend it across, and we are going to see how far the market went on Wednesday. Okay, this is just to prove to you that every move in the market again is measured. If you look right here, that is 1.5 standard deviation right over here, which is actually the consequent encroachment of a monthly rejection block. I've been talking about this monthly rejection block for the past weeks now. You are going to, if you put your GBPUSD on monthly, you are going to see this level here. Okay, this is a consequent encroachment, which is 50% of that monthly rejection block. You see how we traded into that, which is actually 1.5 standard deviation, 1.29809, and then we saw how the market retraced from there. The market eventually came back again into this level, so you could still be a buyer here, multiple opportunities. Okay, and then you will target all of this liquidity resting above here. There's also external range liquidity over here, which is buy side liquidity. You could target that. You can watch the previous video. I did talk so much about this, okay, so that we don't waste time again. Now on to Thursday. When the market opened on Thursday, it was actually a bearish day. We saw how the market stayed below the midnight opening price, which is the IPTA through the open, this price that I've marked here. Okay, and we did not really go above. We went above it, but not too much. And then what happened? We saw how price sank lower. How far did the market go lower, and why did it go lower, and why did it react to that level? The market went lower into this 4 hour, this 1 hour bullish order block, which is the order block that I did talk about right here. You see how we traded into its midpoint, which is called the mean threshold, okay, and that is what 1.5 standard deviation, 1.29259 right here. So this could be a very good trade opportunity for you. We retraced back into the midnight opening price and traded into this. There's a small fair value gap right here, 15 minutes. If you look here on the 15-minute time frame, that is why you see the market is currently staying here, because they are encroaching into that 15-minute fair value gap, and then the market did not trade above that level again on Thursday. So on to Friday. Let's see what happens on Friday. We saw how the market opened on Friday last week, and this is the midnight opening price here again, through the opening price, IPTA opening price. Even on Friday, you see that we did not trade above Thursday midnight opening price, right? The market opened, and this is a Judas swing right here, okay, which was actually the move on Friday, midnight opening price. And how far did the market even go down again, and why did it go down? We are going to take that measuring move again and see how far the market went lower on Friday and why did it go lower. So let's see how far. If you look at it critically, you are going to agree with me that the market actually went a half standard deviation on Friday. And where did it go into? It went into this 4 hour. There's a 4-hour bullish order block right here, this one that I've marked in red here, 4-hour bullish order block. It went into the high of that 4 hour, and then it shifted market structure, and then I did take a buy right here, okay. This is the trade that I took on Friday, this trade here I bought here. On euro dollar, I'm going to show you what happened there, okay. And I was just targeting like this highs right here. That was the recent high that was formed, okay. I just targeted this high as my lowest profit objective, but I knew that price was going to trade above and possibly above this high, but it did not go. But for euro dollar actually went higher. I am going to show you very soon. And then later in the day, the market retraced lower into the upper quadrant of this 4-hour fair value gap, which is also acting as an inversion fair value gap, okay. I'm going to talk more about fair value gaps in our subsequent lessons. So the moment the market is open, you see how we stay above here. Our draw on liquidity for me coming into this new week, I am anticipating that euro dollar or pound dollar is still going to trade higher, okay. There is a monthly profit target that we have been looking at, a draw on liquidity, buy side draw on liquidity, that is actually very higher. If you have been following the old videos, you will look at that. I recommend that you should watch the old videos so that you can understand what I'm saying, okay. I'm going to show you when I go to euro dollar. Now on to euro dollar for last week. Let's go back and see what happens on Monday. Now on Monday for euro dollar, we equally saw the market opened. There was actually a great move on Monday. It went lower, half a standard deviation, okay, and traded into a 4-hour fair value gap and then retraced lower. So you could actually be a buyer right down here, okay, or you could be a seller when the market traded above this Asian high buy side liquidity. So you could still be a seller there. And we saw the market trade back into this 4-hour fair value gap, and we never went below that, okay. You saw how we encroached into that, okay, and then went higher. So let us look at what happened on Tuesday. On Tuesday, we saw the market equally open and then traded lower back into this upper quadrant of this 4-hour fair value gap, okay. And then we also took what, the Asian low sell side liquidity with this small move down here. Now the question is, how far did the market go? So we are going to look at that using our Fibonacci tool on Tuesday. So let's extend our Fibonacci tool and we are going to see how far the market went on Tuesday. Now the market did actually go 3.5 standard deviation on Tuesday, which is about the lower quadrant of a monthly fair value gap. We have been talking about that monthly fair value gap on euro dollar if you watch our old videos, okay, which is this level right here, okay. This is the monthly fair value gap, the lower quadrant of that monthly fair value gap. That is how far euro dollar went on Tuesday, okay, which is actually 3.5 standard deviations. But what have you been targeting only? You have been targeting only 1 standard deviation. So if you did buy, your profit objective will have just been one standard deviation right here, and you actually be correct. How many pips was that in total? That will have been around 50 pips, which is actually very good, right? If you make 50 pips in a day, that is actually a very massive move. Okay, now on to Wednesday. Let's see what happened on Wednesday. On Wednesday, we saw the market opened and then traded below the Asian low, taking all the Asian low sell side liquidity. So you could actually be a buyer right here, which is actually what we have been preaching. You could be a buyer right down here below the Asian lows, or you could still be a buyer at the midnight opening price right here, right? And then you could still target this Asian highs buy side liquidity, okay, right here, and then you will still be right? You will still be right. If you look right here, there is a fair value gap here, okay. That's why you see the market has been trading into that fair value gap and we did not go lower. This fair value gap, you see how many times the market came back into that fair value gap, okay. So if that can use a particular fair value gap multiple times, okay, and the midpoint of a fair value gap is what we call the consequent encroachment, okay. If the market trades below the consequent encroachment of a fair value gap, you can be a seller, okay. You can be a seller, and above it you can be a buyer, okay. Now let us look at how far the market went lower. If you did take a sell over here, which was still good, if you waited for the market to sweep the Asian high buy side liquidity, you'll have still waited for a market structure shift, and then you'll be taking your sell entries over here, and that will still be okay. You could target the Asian lows sell side liquidity, and you will still be doing great, okay. That would have still been a very good trade. Now notice how many times the market came here and how many opportunities the market gave you to sell on Tuesday, and you see how price stayed below here. You will have still had a very good trade opportunity if you did trade on Tuesday taking a sell. Now let us see how far the market went lower on Tuesday using our Fibonacci tool, and our profit objective is usually what? One standard deviation, right? Below or above the Asian range or the Asian session. So this is actually one standard deviation right here. We didn't make up to one standard deviation, but we did make half a standard deviation right here. So even if your profit objective was here, you will have still been very, very correct, right? You would have still been very correct, and that would have still been a very, very good trade on Tuesday, which is actually how many pips? This is actually 34 pips. That's not very bad, right? That's not very bad. Now let us look at what happens again on Thursday. So on Thursday, when the market opened, I mean, it was a very, very bearish day. We saw accumulation, midnight opening price. The market traded above the midnight opening price just a little, and then closed below the midnight opening price. And we have also said that you can sell you can sell at the midnight opening price. You can sell below, you can sell above the midnight opening price, you can sell at the midnight opening price, okay. So what happens right here, we saw the market sank lower. This color I have here is actually a daily fair value gap that we have been looking at, okay. For the past days or the past week, we have been looking at this daily fair value gap right here. We saw how the market traded right into the low of that daily fair value gap. You see that, which is actually about 3.5 standard deviation right here, okay. We touched the low of that daily fair value gap. If you put your chart on a daily time frame, you are going to see what I'm saying right here, okay. We traded into that low, and then the market started moving higher. That was a very, very bearish day, okay. A very bearish day for Thursday. Now if you did target just one standard deviation, your profit will have been hit right here, and then you'll be out of the market. And you see how the market did hit one standard deviation and then retrace from there back into what? The midnight opening price. Now see how many opportunities the market gave you at the midnight opening price. You could be a seller here, right? You could be a seller right here below or at the midnight opening price, and then you will have had a massive move on that day, okay. That was a very good trading day. Now on to Friday. Friday gave one of the best setups of the week. If you traded EURUSD, I mean, this was a very, very good day. Now we are going to see the ICT power of 3 right here in practice, where you have the accumulation, the manipulation, and then the distribution. We saw how the market opened, accumulated, okay, and then midnight opening price right here, the market traded lower, took all the Asian lows, sell side liquidity, which is what we have actually been preaching. If the market takes the Asian low, sell side liquidity, we want to see a market structure shift, and then we are going to be looking for what? Buy opportunities, and then we are going to be targeting one standard deviation above the Asian range. Now, this is where the market structure shift occurred right here. After taking all the Asian low sell side liquidity, a market structure shift did occur right here when this swing high was taken, right? And if you study right here on a 15-minute, this is a 15-minute breakout block right here. I was actually looking at that, okay? I was actually looking at this level when I was taking a trade on pound dollar, and I did not want to see price trade below here. Midnight opening price breakout block, that was a very, very massive confluence, okay? So if you were not able to buy below here, you could still buy right here, okay? You could still buy right here and study how far the market went higher, okay? The market did really, really go higher on Friday. I mean, it was one of the best setups of the week for me. I don't know about you if you were looking at euro dollar, okay? Following this same strategy that I have been teaching. Now, let us see how far the market went using this FIB extension. Now, if we targeted just one standard deviation, our profit objective will have been hit right here with so much aggression. And that would have been a very, very good trade for Friday, okay? So if you bought here, you will have met about one standard deviation will have been 50 pips, which is very, very good. If you bought above the midnight opening price and into this 15-minute breakout block, and you targeted just one standard deviation again above the Asian range, that would have been 38 pips, which was still a very, very good trade, okay? And then how far did the market go? The market actually went 2 standard deviation above the Asian range, which means that was 2 Asian ranges on Friday, right? You see that? That's very, very algorithmic, and it's very, very perfect, right? And if you look right here to the left here, there's actually a bearish order block right here, and that is where the market traded into before sinking lower, okay? And then you see that very accurate 1.09107, 2 standard deviation above the Asian range, and then we saw how the market retraced on Friday back into the high of this all-time daily bearish fair value gap, okay? The high of that daily bearish fair value gap, which is where we are currently trading, and the market is open, and we are seeing price staying above this high of this daily fair value gap. So looking into the week, we are still this daily fair value gap, okay? So looking into the week, we are still bullish. We are still bullish. Our overall draw on liquidity is to see the market trade higher, except otherwise we want to see the market trade higher, okay? Maybe back into this this is a monthly fair value gap actually that I've marked here, okay? This red level here is a monthly fair value gap, so we want to see price trade above that, and possibly our overall draw on liquidity is to see price trade right above this highs right here, maybe to sweep all this buy side liquidity that is resting above here. If you have been watching the videos, our overall draw on liquidity is to see price trade right above here. Please go and watch the old videos so that you can understand exactly what I just did here. So I hope that you have been able to learn something, and just go ahead to practice exactly what I've been teaching using the Asian range. It's actually a very, very simple strategy. You are going to at least find a setup in a day, okay, in a week at least. Try this strategy and you are going to thank me later. Thank you so much for watching again. If you are new, please I plead that you should like the video. If you are an old subscriber, like as well, share as well, and comment, okay? If there's something that you don't understand, ask in the comment section and I'm going to answer you. All right, thank you so very much and have a wonderful week. Trade safe and goodbye.